Hey there, and welcome back to I want to call it quite a show. We're just going to do a market update, whether you're seeing us online on one of our YouTube channels or also on Facebook. We are seeing this live. Perhaps you're seeing it recorded. If you are watching this live and you have some questions about what's going on in the Orlando market, that's what I'm talking about today. Every month, the ORA, the Orlando Regional Realtors Association, gives out a full report of what's happening in real estate in the market. Let's take a look at what they've shared with us and really deep dive a little bit into what the market is showing. So if you have any questions specifically about you, your mortgage rate, should you refi, this will be Orlando specific content. Yet if you are somewhere else in the country and you want some perspective, I've got some thoughts on what might change or what might happen based on what we're seeing in this data. So let's take a look at what ORA told us is happening in terms of the real estate market.
Orlando area home sales, while the median price also continued its upward path. Inventory, on the other hand, fell again year over year. A total of 3,478 homes sold during the month, a tally that is 16% more than the 2,989 sales in September 2019. The median price of an Orlando home sold in September was $270,000, which is a 10% increase compared to September 2019. Would-be buyers continue to be challenged by the limited number of homes available for sale in Orlando. Compared to September 2019, the number of homes on the market decreased by 23%, while compared to last month, there are less than 1% more properties available. There are currently 5,972 homes listed for sale. Whether you're looking to buy, sell, or rent, contact a realtor today so you can get moving.
All right, so I took some notes there, and maybe you did too, maybe you didn't. But as we look and think about what we saw, 16% more sales in the same time last year, September 2019, first September 2020, 16% more. That is a massive amount when we think about the numbers. They went, I think from about 3,000 to about 3,500. So more sales are happening. If there's more sales and combined with a 23% less inventory, so we actually are fighting with a gap of 7%. If you guys think about that, 16% more sales, 23% less inventory creates an even further shortage of inventory by 7%. It's no wonder prices have increased by 10%. So what does this mean? Prices have increased by 10%. In layman's terms, if you bought a house last year for $300,000, you could sell it today for $330,000. That's pretty nice equity. When we talk about, real estate is the best way to build wealth, you're getting 10% now. Is that going to be stable? 10% year over year? I hope not. It's not sustainable. So we don't want it to do all that. Yet right now we're going, when's it going to change? Well, let's take a look at some of the reports that we're seeing. And I'm going to pull it over here so we can all look at it together. Here we go. All right, so let's take a look. We've got this, and hopefully you can see this. If you haven't already, then please zoom up and zoom in. This is September 2018 right here. We're going down to September 2019, and then finally September 2020. If we go column by column, by the way, if you do have any questions, please just type in the comments below. I can share specifically with what this means for insights. But let's just take a look. In a matter of 2 years, we've gone from 4.6 to 3.6 to 2.7 year over year. If you are anywhere above here, I'd say if you bought a house or you refied somewhere around this 3.85 or higher, I'd seriously consider calling your lender of your choice. If you need some recommendations, we've got some rate recommendations. Yet call them and say, what would it take for a refi? A couple different ways you can refi. You can do it with zero cash out of your pocket. Essentially, they roll in the closing cost into your new loan. We just did this yesterday, actually. My wife and I closed on a refi, and we just bought last year, right? We just bought in August of 2019. 3.72 is the average. Yeah, we had a 3.85. And last year when we did 3.85, we're going, wow, that's amazing until you look. And then we just closed with 2.625. Our mortgage total principal, interest, taxes, insurance It went down by about $400, by about 20%. So that's a pretty big deal. We did bring some cash to close. We chose to pay our closing costs versus roll it in. Yet we could have rolled it in, especially if you bought here in 18. You've likely got some nice equity in your house. So maybe you owe $250. Now you can owe $262. So on one hand, you owe $12,000 more. That's your closing costs. On the other, your house is worth more. You can likely get rid of the PMI, and your interest rates go from a 4% to a 3%. That's going to save you a couple $100 a month as well. So there's a great way, advantageous way that if you're looking to buy, we've never seen a more affordable time to buy in terms of borrowing money, which is a good thing because prices are going up. Look at this inventory for the next four columns. We're going to look. I'll just blow this up. You need to see my face for it. So let's just take a look at this. For the inventory, let me take that off. There we go. Let's take this off. Here we go. Now you can see it clearly. I can see clearly now. I'll stop singing. Inventory. Let's look at the same thing. 2018, 8,000, 7,759. You guys seeing that? 8,000 homes that buyers could choose from. 7,700 homes buyers can choose from. 5,900 homes. The inventory is low. That is driving prices up. If you're wondering what is happening or you're trying to wait for the perfect time to buy, we don't see inventory changing anytime soon, especially when money becomes this cheap because people still have a demand. So as we go through that, there's your inventory. We see it's low. New listings, new contracts. If we just see what's happening in terms of the listing market, 3,500 give or take, 3,500 give or take, 3,800. There's actually more people listing their house now than the same time frame the last year and last 2 years. Yet more people are buying, right? When we look at what's currently under contract, you have 4,200, 4,200. Oh, you can't see my page. That would help. Here you go. Under contract, 4,200. Under contract last year, 4,200. Under contract this year, 5,400. So we're seeing the same month, 1,200 more homes under contract, yet with our new listings or inventory, it went from 34 to 38. So 1,200 more under contract, only 400 more compared to last year, which talks about that $800 fewer homes in the same time last year in terms of a growth standpoint. Looking at what comes back in the market, only 550 versus 650 versus 650. So we're seeing every indicator that says this market is staying extremely competitive, extremely strong. Sellers are still getting top dollar. Here's a great, for instance, we showed a buyer yesterday. A house was listed. What's yesterday is Thursday, today's Friday. A house was listed Wednesday night. We saw it Thursday afternoon at 1 o'clock. We submitted an offer Thursday at 4 o'clock, and so did 6 other people, 7 offers. This is on almost a $500,000 home. The inventory is crazy. Withdraw on 650, 750, 600. The lowest withdrawal rate, the lowest expired rate. Let's look at expired. 190, 220, 217. Why aren't houses expiring? Because buyers are paying top dollar. Why are they paying top dollar? Because the inventory is low and the demand is high and money is cheap. So this is what's pushing that inventory right now. Let's keep looking here a little bit of what's happening in terms of the 2-year recap, because I've been talking about inventory because this is just a good old-fashioned supply and demand conversation. So months of inventory, take a look here. You know, what year is this? I'm going to back out a little bit. There we go. Now we can see it a little bit more clearly. So if we look September 18, you had that units there. Months of inventory is units times the demand. We're just under 3 months. Now we are at 1.75. Essentially, this says if we stop listing houses, yet the demand of buyers continues to stay what they are, then we will be out of inventory in about 7 weeks. That's what that means there. To get to a balanced market, we need to be above this 4.5. Actually, 5 to 7 is balanced. Anything above 7 becomes a seller's market. That inventory becomes an excess, and buyers go, I'm going to pay you this dollar amount And if you don't take it, your next door neighbor will, because everyone's selling and not enough people are buying. When is that going to happen would be a question. Well, we're overdue. We've never had the amount of consecutive sellers market, growing markets year after year like we have. In fact, we've experienced for 10 years straight. Mortgage rates, we've already talked about. Look at the green line. That's this year. Again, there's a great snapshot right here. You blow it up for you so you can see it. Great snapshot of the interest rates. 4.6, 3.6, 2.7. Look at the mortgage rates right here. So thank you, mortgage rate. Historically, if a mortgage rate were to change, historically, it changes after an election or the first of the year. So historically, if you wanted to try to play the game, then try to get under contract or lock in your refi rate before the election is determined or before the new year. Historically, not always. I'm not going to guarantee that. That's historically what happens. New listings coming up. We're September compared to last year. You can see the digital. We've talked about this in the chart, but for some of the visual learners here, you can see it a little more clearly. 3-year history, new listings, kind of all over the place there. Inventory again. Inventory is low. All right, so we're gonna pause right there. I'm gonna remove this. I'm gonna bring back everything we need to do. If you haven't already, go ahead and subscribe to our Facebook, subscribe to our YouTube. Got a couple different YouTube channels, but you can go at Bosley Rick. That's the aha effect. The intention is to be able to bring you information not only about the market, how to read it, how to read that data, also how to run a business, run P&Ls, budgets. I have a podcast that we'll do there. So little promo plug for our Facebook and our YouTube if you want to jump in there. I want to share with you a little bit as we look at this market. What we just looked at was as a whole. There's about 38,000 listings, close to 40,000 listings that will buy and sell every year. So 80,000 sides that are available in Central Florida every year. If you look at the market, that's as a whole. If you recall from the video, the median price point was about $270. Frankly, the $270 price point right now is so competitive. I'd say it's close to 1 or less than 1 month's inventory. Adversely, if you get up to these 750,000 or above, the luxury market, we're actually closer to 8 or 9 months of inventory, which means if you are a luxury buyer, you do have choices. If you're a luxury seller, you might not get that top dollar or the 10% growth that everyone else is getting, because frankly, there's just less demand because there's less people who can afford the luxury homes. Also, when you look at it, if you're looking to list your house with me or somebody else, they can give you this data, yet your neighborhood has its own micro data. Your price point has its micro data. Your county has its micro data. Get hyper local when you get these comps. Find out what's happening specifically to your neighborhood, your zip code, your city, your county before you look at the entire board. That's going to help you make sure you can strategically place yourself. You know, there's been some objections that people ask. Let me try to share my screen here. Give me a second. I'm going to pull up my iPad. I want to draw little visuals for you here. As it's pulling up, if you've got a specific neighborhood or area that you want to ask about, drop it in the comments below. And I can pull up some data. We can pull up the MLS and do a real life snapshot of your house. So if you want that, just drop it in the comment below there. Come on, let's get here. There we go. Now I'm going to share my screen on the iPad. Beautiful. Here we go. So as we look at the price point, right, there's the bell curve, and every house has 3 prices. It's typically what the buyer wants to buy it for, the seller wants to sell it for, and then somewhere in the middle, and this is going to be what the appraiser says, hey, this thing is worth this. And in my experience, so long as you're in the market somewhere here or somewhere here, the appraiser is going to agree. Rarely are they not, unless we're finding that we are way below or way above what comps are showing, because we're never really going to say this is the exact moment. And in fact, the best comp for a house is the current contract, because in this date on October 16th, you had a buyer who's willing to pay this price and a seller who's willing to do it. That's actually the best comp you can get. So if you end up right here, the appraiser might go, hey, that's the median, but I don't disagree, so it can appraise at that. Or this is the median, so we're going to appraise above that value. As the appraiser goes through here, it might be you have an up price here, and the appraiser says, well, I would have probably said 300, but I don't disagree with 310. I can justify it if it's there. So as you're looking, what you want to do as you're doing your pricing strategy is make sure you're somewhere on the bell curve. If you think you're a seller and you want to list it out here, you're actually going to be removing a lot of buyers who are shopping right here that otherwise would be buyers for your house, but they stopped their search because you're completely out of market. Or if you're sitting over here at 350 and a comparable home sitting here at 325, they're going to be, not only are they going to see the 325, find it a better value at 325, they're also going to feel like they can get their price they want of 300 off of 325 versus 350, even if they both should be 300. So don't price yourself out of the market. As long as you're within the market, that's great. Know that the average list price to sales price right now is about 97%. It doesn't mean it won't be 105% and it won't be 92%, right? So don't go into it and ask your realtor, what should I ask in general for a home? I'm never going to say, never ask less than 97%. I'm never going to say, don't ask more than. The offer that we have with 7 offers, we went 5% above. If we get it, we'll be at 105% list price to sale price. And we're still going if we get it. So just keep that in mind with the markets. We'll be doing this monthly. If you have any specific questions between now and then, if you're watching this later, go ahead and drop it in the comment and I can still help out because we're on the pages there. Just know that interest rates are extremely low. If you have above 3.5 or 4, we can get you in contact with the lender. If you don't have one, to do a refi or consider a refi. It's also a great time to invest because markets continue to still drive up. If you're looking for prices to drop, waiting for the market to shift, you might be waiting a while. With this, we heard Disney laid off 30,000 employees last month. Well, that's 30,000 through Disney worldwide, right? So that includes California, hotels, hospitality, everything. Doesn't mean it didn't impact massively a lot of people and some dear friends of mine in Orlando. So are we going to see a furlough bump in inventory? Are we going to see that? Yes. I'm not sure we're going to see it enough to shift the market into a buyer's market. I think what we're going to see is a surplus of inventory of people with secondary homes. If they need some excess cash or do a cash out refi or do something to help stabilize their personal finances, they might sell the secondary homes, or we might see some people downsizing. And I think we're going to see the effects of COVID-19, furlough, and layoffs around the third quarter of 2021. So we'll see. We'll do this once a month. I'll bring on some guests periodically, and we'll chat about the market. But until then, you guys have a great day. And if you like any of these other videos, make sure you check out, like, and subscribe all the pages here, and we'll make sure we keep you up to date so you'll be the most savvy buyer, seller, or investor. I'm Rick with the Bosley team at Keller Williams, and we'll see you next time. Thanks, guys.